Good morning, good afternoon, depending on where you're joining us from. I would like to welcome you to this webinar, jointly organized by the Office of the Special Advisor on Africa and IFAD on the development potential of remittances and diaspora finance in Africa. The cascading and intersecting global crisis from COVID, energy, and climate crisis have had an adverse negative impact on Africa's sustainable development. We have seen sharp deceleration in growth rates, rising poverty, and inequality. The ongoing geopolitical tensions are also compounding the impact of COVID-19 pandemic, and all of these have significantly widened the financing gap for Africa's sustainable development. For example, the IMF estimated that Africa would need to generate additional financing between 518 billion to 719 billion just to put the region back on its pre-COVID growth trajectory and income convergence with advanced economies by 2025. Although domestic resource mobilization remains the key underpinning of a more resilient and self-sustaining growth for Africa, mobilizing additional external resources will be critical to support Africa's recovery and building back from COVID-19 pandemic. Therefore, African countries will have to intensify efforts to mobilize increased remittances and diaspora finance. It is against this background that this webinar is being organized. It is the first in a series of events that will be organized leading up to the Global Forum on Remittances, Investment, and Development in June in Nairobi next year. The objectives of this event is to identify challenges and opportunities for leveraging remittances and diaspora finance for Africa's sustainable development, highlight best practices and policy innovation in mobilizing remittances and diaspora finance, and lastly, to explore avenues to leverage remittances to promote financial inclusion and resilience in Africa. Ladies and gentlemen, we have an exciting agenda before you. We will hear two opening remarks from the organizers, USG Christina Duarte, a special advisor on Africa, and then from Mrs. Jo Puri, Associate Vice President, Strategic Knowledge Department, IFAD. And then we have a presentation from my colleague, Lewadin Flees, Program Management Officer, OSAA, just to set the stage. And that will be followed by a panel discussion to be moderated by my colleague again, Liwa. The panel brings experts and practitioners from a diverse background. They include Mr. Amadou Cisse, Executive Director of the African Institute for Remittances and member of the OSAA African Knowledge Network, Mr. Pedro de Vasconcelos, Lead Technical Specialist and Manager of the Financing Facility for Remittances at IFAD, and then Mr. Philip Abrudu Otto, Director, Research Department, Bank of Ghana, and last but not the least, Mr. Nika Nagawi, Executive Director, Mobile Network Operators, MFS Africa. That panel will be moderated by my colleague Liwa, and it will be followed by an interactive discussion. And then we have the conclusion of our event. So, ladies and gentlemen, without further ado, I would like to welcome my USG and Special Advisor on Africa, Mrs. Cristina Duarte, to deliver her opening remarks. USG, you have the floor.
Thank you, Kava. Good morning. Allow me to start by greetings, special greetings to our partner, IFAD. I had the pleasure to meet 2 weeks ago in Rome. We had a very interesting conversation. Good morning to our speakers that have made themselves available for this conversation. In these my, let's say, welcome remarks or introductory remarks, I will touch in a couple of, I believe, critical issues to start changing, because this is the purpose from a policy making in Africa, to start changing how policy making in Africa has been approaching remittances. But of course, first, I'm pleased to welcome everybody to this webinar. As Kava mentioned, is jointly organized by OSAA and IFAD. And this webinar marks the start of what I'm sure will be a long and strong partnership between OSAA and IFAD around this subject, but not only around remittances, but we are already working with IFAD, and we'll be working even more in 2023 around food systems. Why remittances? Why today's conversation? Allow me to provide some context information, let's say in this way. All the strategic agenda has 6 clusters, and cluster 1 of all the strategic agenda touches 3 important and critical aspects from a financing for development, as Africa is concerned. Domestic resource mobilization, and how African countries need strong DRM systems, for example, to fight illicit financial flows. And yesterday, we launched a flagship report from OSAA, where this subject was the main subject of the report, strong DRM systems, so that should be given the primacy role when we discuss financing for development in Africa. And a second issue under cluster 1 that is related is credit rating agencies, because there is a clear situation of double standards when assessing Africa's countries' risk profile. And this is linked to weak DRM systems. So these 2 issues are related. The third issue under cluster 1 is remittances. And people might ask, how come remittance fits in this conceptual framework? And exactly, I believe that this webinar will respond to this question. We know that in light of the negative impacts of the cascading and intersecting global crisis on financing for development in Africa, African countries need to arsenal all possible sources of financing to fill the huge financing gap. Of course, in the short term, from a policy-making standpoint, the first thing to do is to identify what are your available flows. It's not to chase for new financial flows, because to chase for new financial flows takes on average 5 years. to generate new financial flows from a national financing standpoint. So I would say that for any Minister of Finance in Africa, when dealing with this homework of filling the gap, the first step is to try to identify in a very clear way what are the existing financial flows that are untapped, whose potential has not been explored, etc., etc. And remittances is the first in this short list. Exactly. Remittances in Africa is the first in this short list. But more, as you know, and I will provide some numbers that my team prepare when preparing these introductory remarks, more, remittance is already a financial flow that is happening in a very silent, strong, and permanent way towards Africa. It's already there. So, as I said, we don't need to chase it. But I would like to bring a notion. Remittance have this potential of filling the gap. But remittance potential goes beyond this notion of filling the gap. And according to the report that we launched yesterday, tackling, controlling, amplifying remittances flows that already exist and are flowing almost in a silent and permanent way is also a low-hanging fruit from a policy-making standpoint, because it's a flow that can help African countries to gain policy space. And this is important. How a country, an African country, gains policy space, so gains higher levels of ownership, and above all, decides how to finance its public debt by controlling all the flows, economic, fiscal, and financial. And remittance is exactly within the financial flows, that flow that is the low-hanging fruit that African policymakers have to gain additional policy space. So it goes beyond that notion that remittances are ready to fill the gap, that accounting notion that everybody has been claiming. And this notion of using existing flows, strong flows, to provide better conditions for policymakers to increase the policy space comes from a very important notion that I delivered yesterday in another conversation with UNCTAD. I believe it was yesterday or before yesterday. The relationship between sustainable financing and sustainable development. It's a very important relationship. I would like to take this opportunity and to advocate in a strong way how sustainable financing is one of the preconditions to deliver sustainable development. And sustainable financing links to the predictability of financial flows. If a country enjoys predictable financial flows, that country is in a much better position to leverage these predictable financial flows, for example, when tapping international markets and amplifying its own debt contractualization space. So sustainable financing, in the sense of a country enjoying predictable flows as a precondition to deliver sustainable development, again, remittance fits perfect in this conceptual framework, because remittance is already, as you speak, a predictable financial flow. And by being a predictable financial flow, it can support African policymakers switch from a mindset switch from managing stocks and, more important, managing flows. And I will not go in detail, but during the conversation, if there are questions, I can answer. So basically, Africa needs to tap and mobilize all financial resources, including remittance, for the reasons that I just mentioned, and to break what I have been saying in the past couple of years, to break Africa's financial paradox. It's a continent rich in financial resources, 88 billion in illicit financial flows, 70 billion in efficient public spending, 1.3 trillion in African pension funds, but at the same time, begging for debt reliefs and debt suspensions. So again, remittance, by being a sustainable financial flow, a predictable financial flows, can help policymakers tackle this financial paradox. And when we move to see the size of this flow is huge. So in 2021, according to the numbers that my team prepared, in 2021, African remittance reached $91 billion. And that projected to grow 7.7% in 2022-2023. More. In under crisis environments, remittances proved to be resilient. Can you have? This is the beauty of this financial flow. Is predictable, is strong, and is resilient. Can we approach this financial flow as something more than filling the gap? And unfortunately, the common accepted narrative, and I have been reading a lot, and of course, being from Cape Verde, remittance is an important flow. I can tell you 10% of GDP and 30% of banking deposits. So it's almost the heart of the financial health in Cape Verde. But the common accepted narrative usually mentions the high cost of money transfer, the highest in the world in the case of Africa, the low competition in some corridors, the low financial development and the inclusion, the exchange rate volatility, and etc., etc. But again, all this is true, but we need to go beyond this global accept narrative. And I believe that approaching remittances only as an intra-family charity mechanisms put us in the wrong mindset to create the necessary ruptures to leverage this financial flow. And when we read what has been said and written about remittance, usually you see that the conceptual framework is a quite narrow one, essentially to position remittance as an intra-family charity mechanism. And of course, in my opinion, has been preventing almost everybody to see its development policy to potential from a macroeconomic standpoint. So remitters are one of the low-hanging financing tools that can, as I have been said, that can support policy making and international financing, move away from poverty management to development management. And this is at the end of the day, this is our ultimate goal. Move away from this mindset that I believe most of us are in, managing poverty, and we need to move to a mindset that is managing development. And again, remittance can play a role. Why? Predictable, strong, and resilient financial flows. Of course, as you speak, and I believe Pedro will mention that, remittances are an important financing channel to smallholders and to smallholder farmers in Africa. So it is against this backdrop that this webinar, I believe, is organized. So we expect to create ruptures from this webinar. Just say it, to create ruptures and how to seize the opportunities by leveraging remittance and diaspora finance towards Africa's sustainable development. We need to go to diaspora bonds, because when a country enjoys predictable, strong, and resilient financial flows, that country is in a better position to completely revamp the intermediation financial mechanisms, its own financial market. So, and not just to receive the remittance, put in banking deposits at percent in Cape Verde, and wait for families to withdraw. Much more than that. Much more than that. So my expectation towards today's conversation, please, drive your conversation in the sense to generate ruptures, so we change mindset, how we approach remittance in Africa, outside this intra-family mechanism, charity mechanism. Thank you very much. Back to you, Kava.
Thank you, USD, for your leadership, and of course for that narrative that you are pushing, really challenging the conventional narrative that sees remittances as simply an interfamily charity mechanisms, really which really prevent a policymaker from fully harnessing the potential of remittances. Thank you so much. I'm now going to call Mrs. Jopuri, Associate Vice President, Strategic Knowledge Department, IFAD, to deliver her opening remarks. Madam Puri, you have the floor.
Thank you very much, Kava. It is such a delight to hear Christina talk, actually. And I love the comments that Christina made on think about ruptures, think about resilient, strong, and I actually wrote it down, resilient, strong, and predictable flows and opportunity that remittances represent, and think about not managing poverty, but think about managing development. Really, really appreciate that. Good afternoon, ladies and gentlemen from Rome. I am here to follow a very tough act presented by Christina, but really delighted to be here. In 2021, the total volume of remittances sent by migrants to low and middle income countries amounted to $605 billion, which surpassed basically ODA, so official development assistance, and foreign direct investments, so FDI, to developing countries combined. Out of this amount, almost 100 billion, so out of the 605 billion, almost 100 billion went to families living in Africa. Clearly, we've got to recognize that the development impact of what is the single largest financial flow currently to developing countries today, it can be enormous and is already enormous. Beyond the billions that I'm talking about are really millions of stories of family support. And I know Christina asked us to think about more than just what happens at the level of the household. But I think it is important for us to think about the importance that these financial flows make on nutrition, on health, on education, on conflict, on housing, on housing, on water, on sanitation, to reach for every household their own SDGs, right? Not so much the countries, but their own SDGs. These funds that I'm talking about are sent by more than 230 million migrant workers to their parents, to their siblings, to their children, and to their other loved ones. And really, on average, typically represent approximately 60% of household incomes. Remittances promote financial inclusion of households. Very often, most households, especially the ones that IFAD is targeting, are left out of overall financial markets primarily because they just don't have the collateral, they just don't have the affordability, they cannot afford, they cannot access, and they don't have available opportunities to really tap into formal financial markets. So remittances are really the first point of access to the formal financial system. And when these are linked with financial services, clearly they lead to savings, to investments, to job creation. But here I'm speaking, I'm preaching to the choir, right? But I think the important thing is that they represent a step change. And where we can really take this on is really partner with industry to innovate, to develop far more cheap, inclusive financial services that are linked to remittances that can help hundreds and millions of migrant families to build their way to financial independence. One of the key things that really shocked me when I started to look at the question of remittances, and I wanted to understand, well, what is the cost of these remittances going from a migrant worker to his or her family in a developing country, was the cost of transferring these monies. And in a world where, I do most of my banking on my mobile phone, to realize that for every $200 that are transferred as a remittance, migrant workers have to pay $7 for every $200, really shocked me. And it clearly represents an opportunity and a low-hanging fruit that we can make a big difference in, given the world that we're in, given the world of digitization today, and given the world of technology today. Again, the poly crisis, pandemic, climate crisis, etc., the Ukraine war has played a very important role in highlighting the importance of remittances. And as Christina said as well, it has been one of the sources of resilience for a lot of families. So while everything else was drying up, remittances were really important to keep families resilient and to ensure that they could have livelihoods. The adoption of digital technologies is really the key thing that we want to ensure is supported in the ongoing flow of remittances and the rapid uptake of both online as well as mobile channels. If we want to really think about disruption, if we really want to think about a rupture, I think to see a step change where we can partner with the private sector to develop these opportunities for innovative digital tools and services that can foster, that can reduce the cost, that can foster financial inclusion for both migrants as well as remittance receiving families is clearly key. One of the other things I want to focus on is the gendered aspect of these remittances, right? It is clear that digitalization trends of remittances will not go back to pre-crisis levels. So while this is an opportunity to promote digital and financial inclusion amongst recipient families, it is really important for us to focus on women who are unfortunately 33% more likely than men less likely than men, I beg your pardon, to own a mobile money account. And it again then goes back to thinking about, well, what is the cost of transferring this money? So, ladies and gentlemen, I think important to recognize, and especially from the context of IFAD, where we invest in rural people, but both as a UN organization where we've got to leave no one behind, but also as an IFI, right, an international financing institution, we focus on really ensuring that the work that we do on the ground in rural areas is financially stable and financially sustainable. And it's really important here for us to recognize, and that's why we've got the FFR, we focus on the possibilities that remittances represent for us, especially for rural areas. Really, it's estimated that 50% of the total remittances that we know are sent to rural areas of developing countries. And again, this is where the marginal difference is the most, right? This is where the counts the most, has the greatest impact. I think beyond the overall idea of poverty reduction, clearly remittances and diaspora investments offer the opportunity also for adaptation, for climate adaptation and transforming rural economies. I'm just coming back from COP27. And one of the key things that almost all countries were resolute about and were also unified about was that we needed to see a step change also in how we can support countries to really adapt to the inclement consequences of climate change. Adaptation has to see a step change. And I see remittances as a very, very strong pathway to see that increase in resources for adaptation. We know through recent research that remittance families are more likely to use climate resilient enhancing products and services, especially in agriculture. Diaspora investors also support efforts and investments that contribute far more and disproportionately to climate resilience in rural communities. It is important to recognize, of course, the resilience consequence of remittances, but also the long-term chronic consequences of remittances in the face of fragility that we are witnessing today, that unfortunately will remain an attribute of the globe that we are all living in. At IFAD, we are working very hard with key partners to make remittances and diaspora investments in the near future count even more, and with a special attention to Africa. These topics will be the center of the discussion at the upcoming Global Forum on Remittances, Investment and Development that IFAD is organizing together with the African Union and the UN Office of the Special Advisor for Africa next June in Nairobi in Kenya. And it's an international event endorsed in Objective 20 of the Global Compact, as was said already, as the key platform to build and strengthen partnerships for innovative solutions on cheaper, faster, safer transfer of remittances amongst all stakeholders. IFAD has been organizing this since 2007 in partnership with most relevant international organizations. And the GFRID really has now become a unique event in which public and private sector actors, regulators, the industry, civil society, come together to discuss global and regional remittance-related issues and share solutions to maximize development impact. In parallel with all of this, we are also committed to continuing promoting initiatives towards better access, greater digital and financial inclusion, and enhancing the enabling environment, which includes that cost of remittance transfer, while promoting private sector innovations. I'm really proud to actually say that, we've recently entered into partnership with over 20 private sector entities, and additionally, more than 50 partners in 8 African countries to promote digitalization of remittances, to reduce costs, to promote financial inclusion, and to increase investment opportunities amongst medium and small enterprises. Amongst these are commercial banks, fintechs, mobile network operators, investment funds, cooperatives that are really driving the innovation in African markets. With better access to remittances and adequate financial education, we're confident and reassured that families in rural areas will have even more options and resources to invest in the activities, and that we will cease to see rural areas as the liabilities on the country's balance sheets. Right? Rural areas need to be recognized for their own potential for growth and as centripetal attractors of employment opportunities, of jobs, of growth, and really as centers of economy. And remittances can really play a really important part in that. Given appropriate investment options, we know that there will be a multiplier effect, that families will invest even more in the areas that they live in. And we will all have better lives. So to conclude, IFAD is extremely ready and stands ready to continue to support migrants and their families in Africa and around the globe. And together with the USG, we invite you all to join us in Nairobi in June 2023 for the Global Forum on Remittances, Investment and Development. Thank you so much. You're mute.
No, thank you so much, Madam Puri, for those remarks, underscoring the importance of remittances as the single largest external financial flow to developing countries, and the importance, of course, addressing the high cost of transferring money to developing countries. Thank you so much. Now I'm going to invite my colleagues, Mr. Lewadin Fleece, Program Management Officer, to present findings from our policy paper on strengthening the developmental impact of remittances and diaspora finance in Africa. What is the role of international cooperation? Lewa, you have the floor.
Thank you very much, Mr. Moderator. Let me put my screen on. Do you see my presentation?
Yes.
Okay, great. So this is a policy paper that we have prepared in the Office of Special Advisor on Africa. This is the first of series of knowledge products on remittances. As the USG mentioned in her introductory remarks, remittances is part of OSAA strategic agenda, and it's a very important cluster item that we are focusing on. So this study is about strengthening the developmental impact of remittances and diaspora finance in Africa, and then what could be the role of international cooperation. So here we'll be looking at the remittances and diaspora finance landscape in Africa in general. We'll be looking at the issue of cost of sending money, so why the cost is important, what drives the cost of remitting. But most importantly, we'll be looking also at the impact of remittances on income inequality and development, and of course the role of international cooperation. And also the policy paper proposes some policy recommendations that I will be presenting. So to start with, when we talk about remittances and diaspora finance, I think the first thing that we need to start is definitions. What are remittances? These are transfers made by migrants to their home countries. When we talk about diaspora finance, or in some cases we call it also diaspora investments, so these are the savings by migrants that are invested back in their home countries in different forms: bonds, equities, capital formation, and so on. So as it was mentioned also at the introductory remarks, and also highlighted by Kava, so these remittances are very important flows that are continue to grow steadily and in increasing ways. So they reached, for instance, in 2021, an estimated $91 billion. So these are very, very important sources. So when we take these sources and we compare them with the other external flows, mentioning FDI and ODA, so remittances is basically more than equal both resources. So we have an idea about how important these resources. Now the question is that these are special flows. They are stable, they are counter-cyclical, and then they are more resilient compared to all the others. What I mean by that, For instance, during the COVID-19, we saw a decrease sharp decrease of many other sources, whereas remittances increased, and then migrants were continued to support their families back to buy food, to access healthcare services, for education, and so on. So we all know that remittances also, they contribute to achieving the SDGs. So most of the SDGs are linked to remittances. And then in 2022, they are projected to grow again by 7.1%. So when we look at African countries, the study showed that many African countries actually rely heavily on remittances. So some countries, they have the share of remittances as part of the GDP can reach almost 38%. So these are very important sources for the countries. So in terms of the top African countries receiving remittances, we have Egypt, Nigeria, Morocco, and then the others are less than 4.5%. So many African countries actually are relying on these resources. So that's why we are talking about them. Now, the question is, how much does it cost to send money back home? So I think the response was already revealed in the remarks. But here we can see that sending money to Africa is very expensive. And then the cost is the highest in the world. So 7.9% compared to the global average of 6.1%, and then very expensive also, and then above the SDG 10.C target of 3%. So we are very far away from the SDG target. So that's why also there is need to focus on reducing the cost. And actually, when you look at African countries, sending money to some African countries can take up to 20% of the money sent. So these are very high costs. And then also one of the issues that the paper talks about is transferring money within Africa and also receiving money from abroad. So transferring money within Africa is actually far more expensive than receiving money from abroad. And these are linked to the issue of the low development of financial services, payment services, and so on, all the challenges that within African countries, because also we should have in mind that there are migrants, African migrants, living within African countries and sending money back to their home countries. So if it is someone who is living in South Africa, for instance, and working there and sending back his money to his family in Niger or in Chad or any other, so that's also count as remittance. There are some corridors that are very high, so 13% and so on. So all these are very high cost corridors. So if we talk about reducing the cost, so there is need to focus on tackling reducing the cost on those high cost corridors. So again, the question, so why we talk all the time when it comes to remittances to the cost? Because it's an important, and study shows that if we manage to reduce the cost of remittances to the 3%, the SDG target, so actually the flows of the remittances, the global flows could double. So can you imagine the impact on, for instance, when you talk about Africa, so now 91%, and then it will be double, so those are huge amounts. And then also another study estimated that by reducing the cost of remitting $200 by 1%, this increases remittance volume by 1.6%. So still focusing on cost is important, and it's an SDG commitment. There are some drivers for this high cost. I think the issue of the degree of competition in remittances corridor is one of them. So when there are very few or only one money transfer operator on certain corridors, so there is no competition, and then they apply the fees that they want. The issue of availability information to the sender. So if I want to send money back to my family, so if I don't have information about the very different options, the different costs, so that also I can be ending by choosing the highest cost where other options are available. The issue of migrant stock, what we mean by that in certain countries, if there are big numbers of migrants, so that also contributes to reducing the cost, because that's an important market for the money transfer operators. So they have also they will try to offer better services and also reduce the cost to be competitive, attract customers. The issue of exchange rate stability in recipient countries. So if I'm sending money today and then in the country of origin, the exchange rate will increase. That will impact the money received by the family members. So that also is an important fact. The issue of financial development, actually, in both the sending and receiving country, is also a key factor. The issue also of transfers instrument. So how the migrant will use either by cash, so hand to hand, or using the bank or mobile tools. So all these are important costs. It shows that, for instance, using mobile is cheaper compared to other transfer instruments. Also, the channel used. We know that many migrants are undocumented migrants, so it's hard for them to use the formal channels, having bank accounts and so on. So they prefer to using the informal channels, which ends up also being very costly. Also, the issue is that when we talk about at the beginning of the presentation, 91 billion, actually those are the formal remittances captured within the formal channels. And then some estimation actually shows that the real figures, when we include informal, could be more than $200 billion per year. When we talk about the impact, so we tried in the study to look at what is the impact from the income inequality, and then we found actually a positive correlation between the cost of remitting and income inequality. So we used the Gini index in this regard, and then the analysis actually confirms this income equalizing effect of remittances. So where the cost actually is reduced, so more remittance flow can go to the country, and then that impacts also on reducing the income inequality in the receiving country. However, when we try to look at the correlation between the remittances and the poverty reduction in general and development in general, so it was a little bit difficult to find significant correlation using the multidimensional poverty index. But also the analysis showed that higher volume of remittances received by countries are associated with, in many cases, lower poverty rates. Then we tried to look at the overall picture and then see what are the challenges that are faced. In this figure, we tried to look at the whole perspective. So basically, how the process is made is that in the host country, So the migrants, we divide them in two categories: those with low revenue levels, and then with those with high and medium revenue levels. So basically, with the migrants with low revenue levels, most of the time they send money in terms of remittances to their countries. And then one of the major issues that I was talking about is the cost. So the importance of tackling reducing the cost. When we talk about migrants with a medium to high level revenue, so they most of the time they generate savings. These are migrants, maybe the second or the third generation. They don't have those direct relationship with their family members, but still they're attached to the home country. So they generate substantive savings. They send also remittances, but most of the time they are savings in the host country. Now the question that the problem for this kind of sources is that how we can bridge the gap from savings in the host country to investment in their home country. I think this is where the international cooperation could play a role in first reducing the cost, but also helping countries by bridging the gap. So these savings actually should be facilitated to be channeled into what we call diaspora finance, to be invested in bonds, to be invested in capital formation, establishing SMEs and so on. And there we can look at some growth generating impact. So basically, this is the part where we have problem and then where we need to act upon. So basically, I will jump to the policy recommendation part. So what the policy paper talks about. So we identified 6 main areas. So the first one is about strengthening competition in remittance industry. This is an important part because when you ensure market competition and regulation are favorable to remittances, that helps in also reducing the cost. And then what could be done also is try to focus on removing some exclusivity arrangement in money transfer industry, basically in specific corridors, as I mentioned earlier, those that have very high cost because some of the exclusivity arrangement that they have there. The second recommendation is about the African Institute for Remittances, and I think we are lucky today. We have the executive director with us, so he'll be talking more about this. But we identified this recommendation because we showed that there is a research gap on the developmental impact of remittances, and then how we can bridge that gap that I was talking about. So I think we think that African Institute for Remittances is an important stakeholder in trying to fill that gap and also take ownership of this agenda. Promoting financial inclusion, I think everyone talks about this is an important aspect, and remittance can play a very, very important role in bringing people to the formal financial services. Money, mobile money was highlighted, encouraging also the diaspora to direct to use their saving and direct them to investment. I think this could be done by developing some kind of ecosystem around remittance-related services in their original countries, but also try to have some kind of coordination between the host country and the country of origin. So also by facilitating actually financial inclusion and putting in place the adequate policies, regulation that I was talking about, so we can also push or highlight or the poverty reduction aspect of remittances. But beyond that, push for the developmental generating impact of remittances. So the recommendation also talks about developing the African financial sector. And then there are some best experiences that were identified, where African national banks were encouraged to operate in migrants' host country, where they have an important migrant stock. And then this could be done by bilateral arrangement, looking at easing capital requirements for establishment these banks in host country. So the migrants will feel easy to go to a bank that they know in their original country, and they find it in their host country. So they will be very comfortable to do so. Some countries did that. I can mention Morocco, for instance, or Tunisia. They did that in the host country. They have branches of their national banks, and that helped in increasing the remittance flow. The issue of establishing a research agenda for impactful remittances, I talked about the role of the institute, but also is the developmental actually impact is assessed mostly through the host census and surveys, and these are some costly tools that actually require substantive human and also financial resources, and many African countries actually lack that. So maybe if the partnership could help in directing or focusing on these issues of filling the research gap. Finally, the issue of nurturing partnership, I think it's a very important one. Partnerships within countries, and then also with the diaspora, private sector, and other actors, researchers, and so on. Within countries is very important because there are so many misconceptions within countries, and then some countries or some stakeholders don't really understand how remittances work and then how they can benefit their sector. So I think within countries, more coordination within ministries, central banks, from the diaspora side. Also, the diaspora should be more structured in the host country, and then they can come into a critical mass to invest back in their home countries, which we saw that in many instances. Private sector, also a partnership with the private sector between the government and the private sector. And I think we are lucky today in our panel, we'll try to discuss that, since most of these stakeholders are represented. So with this, moderator, I thank you, and I give you the floor.
Yeah, thank you, Liwa, for that interesting presentation. Showing the magnitude of remittances and diaspora finance in Africa, and the high cost of remitting money to Africa, which is like 7.9% compared to the global average of 6.1%, as well as some of the drivers of remittances, including the degree of competition, exchange rate, as well as financial development. And those recommendations, that you highlighted, they are very pertinent. Of course, we are racing against time. It's already 10:05, and we still have, the panel discussion. And I know the panelists are going to pick up on some of the issues that that you highlighted in the presentation. So I'm going to invite you now, Liwa, to moderate the panel discussion. Over to you.
Okay, thank you very much, Kava. So I think today we are very privileged to have this the panel actually, which is composed of distinguished representatives from government. We have the African Union, we have the UN system, our IFAD colleagues, and also private sector. So together we'll be discussing the theme of the webinar, and then they will be bringing also their perspectives on how to leverage the developmental impact of remittances. I'm expecting to have a discussion on the role of the private sector vis-a-vis the government, and then vis-a-vis also the UN system. And we all know that the remittances and diaspora finance, they contribute directly to Objective 19 and 20 of the Global Compact for Migration. Also, they are very important tools in what we says people achieving their own sustainable development goals. It was mentioned also the issue of in the introductory remark, the role of remittances on climate adaptation. But most importantly, I would like to invite the panelists to address some of the misconceptions. I think this is the call on all the panelists to address the misconception on remittances, and then to put forward the very strong recommendations. So today we will have Mr. Amadou Cissé, who is the Executive Director of the African Institute for Remittances. We have Mr. Pedro de Vasconcelos. He's the lead technical specialist and manager of the financing facility for remittances at IFAD. And then from the government part, we have Mr. Kwasi Achiapong. He's the head of the balance payment division. He's replacing Mr. Philip Abravudu, who is the director of research department in Bank of Ghana. And we will have Ms. Nika Nagachi. She's the executive director of mobile network operators, MFS Africa. So let me start by addressing my question to Mr. Amadou Cissé. So Mr. Amadou, the policy paper actually identifies the African Institute for Remittances as one of the major institutions that need to be supported in order to ensure ownership and commitment of African countries to the successful implementation of remittances-related initiatives. So as the executive director of the Institute, could you share with the meeting, please, some insights on the work of the Institute, but focusing especially on the challenges faced in delivering on its core mandate related to leveraging developmental potential of remittances in Africa?
Thank you so much, Fliss. I would like to really appreciate your invitation and appreciate the invitation of the Office of the Secretary of the Advisor. So I would be I'm very interested into your question because it is very key for us. If we want to really harness the potential impact of remittances, there are some key issues that we have to address on the continent. And those issues you have already alluded to them. You said, and very clearly and very strongly, it is important for people to understand what we talk about when it comes to remittances. And I think this is very key, and this is some challenges that we are having on the continent, because there are some mix-up that really people really go beyond remittances when it comes to contribution of diaspora to the economic development. And in one of your slides, I think you have mentioned there two type of migrants, but the same way also we should look at the different sources and the different contributions of the migrants to the economic development. And more, we would all agree that when we talk about remittances, we always put behind people, and we put behind the people that send to support their family. And it means that we are talking here about money that comes from people to other people, mainly migrants, not only migrants, but we go beyond to look at the diaspora in general, how they support people on the continent. At the same time, the same migrants or the same diaspora people, they have some potential savings or some other things, and they also can contribute to the financing the economic development in Africa. And I think that those two things are very different. And if you want to have really very impactful policies, we have to look at what they are really into. The first thing, which is remittances, which we are really interested in, if you want to address it, we think that we should address it in the general framework of the issue of domestic mobilization. Let me explain on that. Because we said that it is person to person. The money, when it is sent from people and it is received by people. And if you look at the general definition, the agreed definition on remittances, remittances are considered as revenue of the household that receive that money. And then from there, if you have to address any issues that are related to remittances, you have to address it from inside and look at really what people are doing with that money that they receive. And most of the time, you have to change the behavior and move from only consumption and to have them really saving first, save some part of that, and then probably look into investment in very small activities and so and so. And the way that we should see that when it comes to contributing to financing development on the continent should be really how can we address the behavior of the people that receive remittance. How can we really design some policies? It could be financial policy, financial inclusion policies, as you mentioned, but it is from inside and that we have to look at it. So it means that these are some domestic policies that we have to implement and in the general framework of the economic policy of the countries. On the other side, from those who send remittances, the assumption is that they are not sending the total amount of their savings. When they send some part, 200, 300, 1,000, whatever it is, the assumption is that there is some more savings in where they live. And to address that, to mobilize that funds, you have to provide to them some really key products that they would be very keen to invest in. And that's why when we look at the remittance in general, we look at those who receive, change their behavior, but also look at those who send and then provide to them some products that they can invest in. And there are so many other issues that we should address. But the key issue is here, who are those people? You have mentioned it in your presentation and in the report. If people are not using the formal channels to send remittances, it would be very difficult for you to identify those people. And on the continent, you've mentioned it, it is very expensive to send remittance in the continent. What are the reasons for that? There are so many reasons, including the exclusivity clauses that tend to disappear in many countries. But the most important reason is that we do not have in some corridors very sizable people that really use those corridors and send remittances. And those corridors, though the competition is very open, but very few operators are on those corridors, and they still take advantage of the people that send remittances. This is what is really happening. The way forward for us in Africa, it is to address this knowledge gap that we are working on for people to understand the issue of remittances, what it is really, and to identify the adequate policies to address remittances, but putting at the heart of their policies the people that receive and the people that send. It doesn't mean that we don't have to look at the ecosystem in general, the industry, it has, but I do believe that the central banks are doing a very great job when it comes to regulating the system, and more competition is happening on the continent and on many corridors. The other issue is that when you have strategies, you need really funds to implement the strategies. We are talking about mobilizing finance, mobilizing resources, but even that strategy to mobilize those resources, it requires resources itself. If the continent, if countries really need to harness the impact of remittances for their development, they should allocate budget to some strategic programs that look into now addressing, mobilizing those funds. Please, those are really my few insights for now. I know that we run out of time, but during the discussions, we'll be very happy to take our additional questions and to discuss those further. Thank you so much.
Thank you very much, Mr. Cisse. I think these are very important issues that you've raised. So let me now go to Mr. Pedro. So Mr. Pedro, IFAD is coordinating the financing facility for remittances. And then this facility actually is very important, and then you are implementing many projects on African countries. So according to you, what are the capacity requirements needed? And then Mr. Sisse was talking about some of them to harness these flows, but also to create the enabling ecosystem that we all talk about on facilitating, channeling these remittances to some financial sectors and products. For instance, if you talk about health insurance, education, scholarships, and so on, rather than only conception.
Thank you so much for your question. It's again a pleasure to be here and organize this with you. I just want to iterate first that maybe the concepts and conclusions that I'm about to illustrate are based on the lessons learned that IFAD has been having over the collective 18 years with 65 projects in more than 50 countries, a total amount of projects of almost 80 million, numerous research. And as Christina asked at the beginning, I would like to start with a disruptive message, because I think it culminates to everything that we're saying. And it is to not ask remittance families, we call them like that, remittance families, not just the remittance flows or the families, or in this case, the family remittances, if we're talking about the flows. But let's not ask these families to adapt to the needs of government or international organizations' development agenda, but the reverse. Let's support governments and international organizations to address the need
Recording
if this is
in progress.
done well, the impact is going to be it's going to be immense in comparison with what we could try to do with our development policies, being at governmental level, international organizations. This is a misconception that it is so widespread around the world that I think we need to tackle. And in answer to your question, the answer is simple, maybe a little bit long to explain, but I'll try really to summarize. The good news, however, is that we know all the ingredients and we know the models. And this models, the problems around is sometimes understanding this concept, how to apply them, and how to disseminate. And I think this forum is doing just that. But when it comes to remittances or family remittances, the greater way that we have seen to support it is around two pillars: access and use. And you need to do those two. And if you try to jump, it's not going to really work. You need to promote the access of remittances. And when we talk about access in 2022, after the pandemic, we're talking about promoting digitalization, have regulations that go hand in hand to that. This will have an impact on lower transfers fees. It's an SDG, it's an indicator, but it doesn't happen magically. There's things that promote that. So digitalization is one of them, but promoting access. For IFAD is promoting access in rural areas, getting remittances in a cost-effective manner, reach rural areas. This is all about the use and the regulations. Once you have achieved that, then you can start thinking about the use. And the use translates in providing more options for the people to use those funds, but not in telling them, don't send it to grandmother, don't feed, don't educate, but put it in development projects because we say so. No, is help them do that in a cost-effective way. And this will leverage then more needs, because family remittances have more needs. And that's what you can leverage. Not one, you can do it one family at a time, but it accumulates to millions of people. We have 800 million people benefiting from remittances. If you support them, imagine that you do the simple math, you can see the impact. So if you do that, you're promoting financial inclusion. The way remittances is going to go to an e-wallet, well, where's the development impact of that? Well, it's great. And I think Mika, for instance, and other colleagues here will be able to illustrate that. But with that, and bringing it to the financial inclusion development aspect that we want, this is, I think, where you can generate more savings, credit, insurance, products that otherwise would not be available for millions of families. And that, I think, is the real development impact. So governments and international organizations, what can they do is facilitate all that, which I think it's a public sector, role. Can we do that? Can we help the private sector innovate? Can we have, as the public sector, create rules and regulations that facilitate that, all in the benefit of remittance families? This is, I think, the greater, the real impact. And if you allow me just one more minute, I want to give you the 5 ingredients that we learn with a lot of sweat, but these are 5 ingredients in the recipe that you need to address. If you miss one, normally these things won't work. We got it from our experience, but the first is address the data gap. We talked a lot about information data. If you don't have data, you're going to fail because you don't know really what you're going to be tackling. Address the data gap is the first. Increase market competition, absolutely. You need to expand access to remittances, the close collaboration between the public and the private. This should be directly in the agenda, the competition. That's how you're going to get public and private sector working together. The third, for the public sector, enabling environment. We heard a lot about that, but this is absolutely necessary in coherent national regulatory frameworks, both on the sending and the receiving side. For many years, we only talk of one side, and I think this is a key ingredient. The next one is support or co-finance business models that link remittances with financial inclusion. You receive remittances, you can promote savings, maybe give a credit, maybe an insurance, and so on. You talked about scholarships and so on, for instance. These are then doable in the right ecosystem. The technology has been there. Since 2000, I saw Salvadorian families being able to buy a pizza for their families back home from Washington, D.C. The technology allowed them to do that. If you had a piece of plastic, you could. The point is, if you want to expand the services, you need an ecosystem that allows, and for that, you need to sort of promote these innovations. And the last, that is the most important one, is if all these models, is all of this is not looked upon in a scalable manner, it will not work. You cannot ask a model that links remittances and financial inclusion that is so great and innovative, but this is not scalable. It will not survive, and it will do more harm than good. So at every level, be it in promotion of private sector models or public sector policies, we need to look into the bigger picture. And the scalability is the last ingredient that I believe is necessary. Thank you. I'll leave you with that.
Thank you very much, Mr. Pedro, for bringing to discussion these very important issues. And then I think your message is very well heard. And thank you for giving us this secret recipe for succeeding on remittances.
It should be secret, and maybe that's the problem.
I don't think it's secret anymore.
Over to you.
Yeah, so I think in the interest of time, I'll be going to our next speaker, and then in your recipe, you in the third, I think, point, you mentioned the importance of the enabling environment in terms of the regulatory framework, and then today we have with us a representative from the Bank of Ghana. So Mr. Kwasi, so how can African countries, for instance, leverage these remittances and diaspora finance to contribute to their growth? And the issue of regulation was talked about. So how also countries could strike the just balance of avoiding, in some instances, over-regulation of the operators, which actually will bring more harm than good to the sector. So could you please address this question? Thank you.
Okay, yeah. Good afternoon to everyone. It's afternoon here in Ghana, 3 o'clock. First of all, the Director of Research, Mr. Philip Bradioko, extends his apology for his inability to join the webinar. He was called in the last hour to join an equally important meeting. Yeah, first of all, let me commend OSAA and IFAD for organizing this webinar to raise awareness of the importance of remittances and diaspora finance and their potential in contributing to African development agenda. Yes, remittances continue to be on top sources of financing in Ghana and Africa in general, despite their increasing volumes. In Ghana, for instance, remittances flows over the past few years have averaged over 3.5 billion. This is just the official channel of remittances, excluding the informal channel. And the World Bank estimates that remittances in Ghana, for instance, in 2021 was around $4.5 billion, which is the second highest in the Sub-Saharan Africa. And they've remained quite stable in the midst of global uncertainty. And data from the Ministry of Foreign Affairs in Ghana, for instance, suggests that there are over 3 million Ghanaians living abroad. And these migrants transfer remittances to support families back home for food, education, health, and undertake investment. At the macro level, it is a vital source of foreign exchange and a major component in the current accounts, thus helping to reduce debt-creating flows. These numbers suggest that the remittances ecosystem has great potential, and applying the necessary policy interventions and initiatives within a well-defined regulatory framework could harness the potential in the remittances market to support economic development and help reduce poverty. First, there's a need for regulation to engender competition and also reduce cost. For instance, in Ghana, there has been so many fintechs, MTOs, and service providers in the remittances market. And this has introduced complexities that require supervisors' focus to understand and supervise effectively. In Ghana, a new regulatory framework known as Payment Systems and Services Act has been passed to regulate institutions which carry on payment services and electronic money business. In furtherance of this, the Bank of Ghana, for instance, has established a new FinTech and Innovation Office to drive the bank's digitalization agenda. That is the first one. This enabling policy framework has helped increase the number of service providers and engendered competition with an associated benefit of reduced cost of transfer. Ghanaians in the diaspora now have access to diverse MTO services and are able to initiate funds from their mobile phones in the comfort of their homes at an affordable cost to beneficiaries in Ghana who also receive the funds into their mobile money wallet or bank accounts. Second is trust. There's a need for trust because so many diaspora are unsure of the security and safety of their savings and investment and trusted in African economies. Episodes of diaspora losing their investment abound in Africa. Recently, when Ghana, for instance, undertook a financial sector cleanup exercise, so many diaspora reported to have lost their investment. You also might be aware that Ghana is now negotiating an IMF deal. It is ongoing as we speak. And there is this possibility of debt restructuring. Either there's going to be a haircut on principal or a haircut on the interest. And people who have sent money home from abroad, when they hear this, it reduces their trust in the government. So because subsequently, if you ask them to bring their savings abroad to invest in Ghana, they may be reluctant to do so because of the fear of losing their investment or something of the sort. And I think that there is also the need for innovative and attractive financial products. Well-designed and exclusively for Ghanaian diaspora, these financial products could help attract diaspora capital to shore up reserves and support the economy. Deposit, for example, could be in the form of foreign currency or local currency. And to make the foreign currency deposit attractive, we think that the government and the financial institutions should assure them of free repatriation, both principal and interest, anytime they want. Recently, we heard of Nigeria has introduced a scheme known as the Naira for Dollar scheme, which was introduced around 2021. And it is my understanding that with the introduction of this scheme, remittances flows to Nigeria has increased significantly over the years and continue to increase, and it remains quite stable. And I also think that there's a need for diaspora engagement, periodic meetings with the diaspora on national policies, business opportunities, effort to address their challenges will all help ensure the success in leveraging the financial resources of the diaspora. What about the diaspora bond? Despite the increasing financing requirement in Africa and Ghana in particular, diaspora resources remain untapped, as has been mentioned already. So we think that if you could have a disaggregate data on diaspora, including demography, occupation, reducing risk perception, and marketing campaign, Africa countries, Ghana in particular, can issue diaspora bond as a source of development finance. So for the first issue on measures and initiatives to increase remittances for development, these are my initial thoughts. On the second question, in Ghana, for instance, traditionally, the banks have been the main provider of remittances services, and the cost, speed of transfer, and inconvenience of the bank channel to both senders and recipients have been bemoaned globally by customers, regulators, and policymakers. It has been observed that the participation of the fintechs in the remittance industry will foster competition and also cure the issues of higher cost, speed, and inconvenience associated with bank-based channels. However, the regulatory framework in place in the past favored mainly the banks and the NTOs. And to overcome this regulatory challenge, to leveraging fintechs for boosting remittances without compromising anti-money laundering and countering terrorist financing, Bank of Ghana, or for that matter, the government has implemented a portfolio of policies. This includes the passage of the Payment System and Services Act, which regulates the payment service providers and then the fintechs. And there's also been a proportionate and risk-based regulatory regime, which recognizes different types of service providers and corresponding permissible activities. Remittance business is restricted to the first two tiers. The first is dedicated electronic money issuers, popularly known as mobile money operators. And the second level of category is the enhanced payment service providers. In addition to the Act 987 and Ghana's Foreign Exchange Act, the fintechs that provide inward remittances are also required to comply with the guidelines for inward remittances by payment service providers issued by the Bank of Ghana. These guidelines address specific anti-money laundering and countering terrorist financing issues in the fintech remittance business in line with principle of proportionate regulation. Anti-money laundering reporting officer is a key function in this business model to ensure the integrity of transactions. Fintechs in the remittance business are mandated to have a settlement account or settlement relationship with a bank in Ghana, with which two accounts are to be opened, a foreign account and a CD account. The foreign account received the remittances, and the CD account received the translated foreign money for disbursement to the beneficiaries. The settlement account has an obligation to monitor and ensure that accounts of the fintechs are used for the intended business and in line with anti-money laundering norms. Regular reports on fintechs remittance business are also submitted to Bank of Ghana.
Okay.
Fintechs facilitating inward remittances are also required to implement sanctions, sanction screening, and fraud monitoring tools. Also, the fintechs are mandated by the ISO certified to be ISO certified and comply with Bank of Ghana directive on cyber security.
Okay.
These measures so far have worked well to foster fintech participation in the remittance industry, as well as protecting the sanity of the ecosystem.
Okay.
So these are my initial thoughts.
Thank you very much. Thank you very much, Mr. Kwasi. I think we are running out of time. So let me go now to Ms. Nika. So you are representative of a leading Pan-African fintech company focusing on digital payments. And then we all know that digitalization of remittances could be a solution to achieve or to contribute to affordability. But also, there are some challenges over there. And then from the private sector perspective also, what could be the challenges that money transfer industry actually is facing to ensure the issue of affordability, scalability, and viability of the business? And then how do you see the role of the partnership between the private sector and the public sector in this regard? So could you please address this in few minutes? Thank you.
Thank you. I think there's a silver lining with being the last panelist, because most of the things that I wanted to cover has been covered. But I'm going to be very quick in interest of time. So some of the challenges looking at regulation. So I know that everyone spoke about Africa and what we've seen with the mobile money revolution in Africa. And the main reason behind the success of mobile money today in Africa was regulators' willingness to consider low value remittances, low value basically domestic remittances as less risky. And we need the same level of thinking for cross-border. Because, for instance, as a Pan-African company and that operate across the continent, we see a lot of these remittances between African countries, between, let's say, Cote d'Ivoire to Benin, Benin to Burkina, etc. These remittances are sub $25. And when you put more strict regulation in place in terms of identity, and there's lack of like tiered accounts for people to send cross-border remittances as easily as they can do on domestic level, then we are creating a roadblock. The other issue, and I'm really happy that the representative from Ghana, Bank of Ghana is here, is that many countries are experiencing scarcity of foreign exchange, and in some markets we have multiple exchange rates that exist, and for practitioners like us who are regulated in multiple jurisdictions, this makes it even more difficult to be competitive, as majority of the flows either go through gray routes or unofficial channels that they can offer better exchange rates, or through providers who don't really take regulation as seriously as the likes of us. We know that's a major barrier for us who have a PSP license and a full license in Ghana, for instance. And there are players who are not complying with those regulations. But also the main competition here is the gray routes and unofficial channels. So it's very hard to remain competitive when you want to be compliant and abide by the rules. And I think overall, when you look at the MTO space, there's a need for some level of consolidation. The space is a bit overcrowded. There are so many digital and fintech players, especially on the north side and on Europe and US, that everyone wants to have a level of margin. Everyone wants to enter the market and gain market share, but inevitably we're looking at some level of consolidation there. And what I see as a key challenge is the mindset change, because I think Pedro was talking about it, that we often look at remittances as a single use case, standalone and disjoined from the rest of the financial ecosystem. And then it becomes a game of squeezing margins from every transactions. And if we change the way that we look at remittances and shift to our mindset to view these flows as an instrument for driving financial inclusion and enabling access to more ecosystem transactions and advanced use cases such as loans, insurance, investments, credit, then we'll be having a different conversation. And then altogether, and we're focusing, of course, on designing basically products that goes beyond remittances delivery to a wallet or to a cash pickup point, and are more appealing to the underserved customers that we're looking at. And it also makes the offering more commercially suitable as well. So it means that we can move beyond the customer fees and creating kind of adjacent revenue streams. So for this to happen, that kind of mindset change needs to happen across the industry, that everyone should move away from market prioritization that are really right now concentrated on bigger markets in Africa. For instance, everyone wants to be present in Nigeria's and Egypt's of the world, and not many are interested in smaller markets like Liberia, Gambia, Sierra Leone, etc. And those are the key markets that are for us to achieve scale and SDG targets. We need to shift that mentality and look at smaller markets as well, but also have a value proposition that goes beyond remittances. And I think the other thing is that digitization, we talk about digitization a lot as a silver kind of bullet for reducing costs. We have to be careful that the solutions that you're designing are not leaving major proportion of society behind, because thinking about the solutions that are being designed, it has to be contextually relevant. We are designing solutions for consumers that are not at the same level, all at the same level of literacy levels, including financial and technical literacy levels. And we need to look at that and make sure the solutions are inclusive, they're contextually relevant, they're easy to understand, and you're not leaving anyone behind. So I wanted to keep it short. Over to you, and thank you so much for giving us an opportunity to share our views.
Thank you very much, Ms. Nika, for bringing the private sector perspective, which I think is critical to the success of whatever policy that need to be put in place. So I think without further ado, and I would like to actually thank all the panelists for sharing their experience and perspectives on the issues discussed. So we go to the discussion, the question and answer session. So I will be opening the floor. We try to take some questions. I see that there are some of them are on the chat box, but if someone is interested in taking the floor, please raise your hand. Otherwise, we're starting by taking the question from the chat box. So from the chat box, there are some questions related to the issue of the difference between the banks and the black market when it comes to sending money, and then the issue when we talked about the costs between the formal and informal channels. So, and then we're asking about how can that gap between the formal and informal channel could be reduced in order also to bring more financial inclusivity to remittance family. Another question was asked about when we talk about cryptocurrency, for instance, and remittances. I don't know if someone is interested in responding to that. There was a very important question about how we can change or how we can influence the change from the migrant perspective on continuing of managing poverty. It means like sending remittances for the basic needs to influencing development, which basically meant by encouraging families to save more, so then they can invest more, and then they can get out from the poverty circle. So these are the few questions that I have from the chat box. So please feel free, who wants to respond to this. Pedro, please.
With pleasure. The formality one is an easy one. The answer is, how can we make sure that we push formality? Well, when the advantages of formal services greatly surpass the ones of informal, that's when you're going to get it. Simple as that. If right now sending money to my family is very difficult, I will use a friend, maybe a panelist here that I know that might go through trial, and I put it in an envelope, and I say the government will never know about that, but I will do it. However, if by doing that, my family might get access to a benefit, being a wallet that would allow them to have X or Y, C additional services, I will start considering. Today, it's even easier because of the digitalization movement that we're seeing. It's here to stay. it's going to facilitate all that. But this is how you're going to have it. And I think this is a great message to the governments that are always prefer to be able to account for these remittances. And when it's informal, you cannot, you can only estimate and so on. For the crypto, this is the question that has been going on now for a couple of years. There's no quick solution. It is, and it's not a pro or against. There's indications right now that are showing that for this particular market, maybe at meso level, crypto can play a role, but otherwise it is not the most adapted. And on your last questions is the needs. We need to look at remittance families in a different way. We link this with poverty. They're addressing poverty by their own means. They're not publicizing that. But what we see, and I think the private sector, Nika knows that, is that they have more and they have a growing set of needs. And these many go unattended. So the need for remittance families for savings, credit, insurance is much greater than those that don't receive remittances. And that needs to be just understood. It's not rocket science, but again, it's largely understood, not only by the public sector, but also by the private sector. Those that I found out first are happy because they're the first ones to address it and make business out of it. And we're trying is to have more of them in there. This is in short my answers. Thank you.
Thank you very much, Pedro. So I don't know if any other panel member have comments on this, or otherwise we'll be concluding. Cisse, briefly, please. Yes.
Yeah, very briefly. It's just about the spread that we see in some markets. It's not in any market in Africa. Let's understand that. There are some countries where you don't have the parallel market that exists. And in those countries, still the issue of the cost is there. The cost of sending remittance in that country, in those countries, is very is there. And even if it is important, I think it is beyond the issue of addressing the issue of remittance itself. It is what are the policies that are at the country level in terms of how they manage the foreign exchange. And this happens mainly when in very tight foreign exchange control regimes. And it's the option of the countries, and then we have to work around that for remittance to still to exist. In terms of behavior of the families, it is very key for me that we understand that it is important for countries, if they want really to leverage remittances, if they want to get the maximum of remittances, they have to understand the needs of the family that receive remittances and address those needs, help them address those needs. It's not about changing their behavior in terms of I should not consume, I should not go to school. Rather, it is about changing their behavior towards the revenue that they have, and then help them do the same, manage those revenue the same way others who are working in the country that have job manage their revenue to have some savings. It is very important. Unless we do that, we won't be able to empower the people that rely on remittances to live day in, day out. That's the key message that I have to say. Thank you.
Thank you very much, Mr. Cisse. We are really out of time. So I thank again all the panelists and all the people who asked the question. Unfortunately, we cannot take more questions. I see some hands raised, but unfortunately, we don't have time. Maybe we'll have another time in another webinar. I think these are critical issues to be discussed. So with this, I will give the floor to Mr. Kaba to try to summarize and conclude. Thank you.
Thank you, Aliwa, and to all the panelists. We are racing against time, so I will try to be very brief. We have had a very rich conversation this morning on the importance of remittances and diaspora finance in Africa. We heard that it is the single most important source of development finance, surpassing both ODA and FDI. They contribute importantly to the SDGs, health, education, food security, and potentially could also contribute to climate change adaptation. It was underscored by both the USG and the panelists, the need for a mindset shift away from viewing remittances as an interfamily charity mechanism to viewing them as a critical resource that can potentially drive financial inclusion and development more broadly. We heard, of course, that the potential impact of remittances is hampered by the high cost of money in some of the corridor, the lack of competition. In terms of what can be done to harness the potential impact of remittances for Africa's development, it was underscored that there's a need to have a clear understanding of migrants and who they are, and the need to differentiate between the migrants and the diaspora community. And that understanding will be key to designing appropriate interventions, tools, and products best tailored to their needs. Of course, it was also underscored that there's a need to promote or to leverage digital technologies in order to drive the cost of remittances. The importance of addressing the data gap, increasing market competition, as well as promoting a conducive enabling environment in both the sending and remittance country and remittance senders. I think this is an excellent event, and I want to thank our principals, our USG, Madam Christina Duarte, and the management of IFAD for having the wisdom of forging this partnership. I believe that we are off to a great start. And as we mentioned, this is the first in the series of events that will be organized between now and June next year, leading up to the Global Forum on Remittances, Investment. And we hope that you continue to engage in all these events all the way to the conference. I really want to thank all the panelists for your perspectives. I want to thank Mr. Amadou Cisse, Mr. Petro Devas Concelos, Mr. Philip Abradu Otto, Mrs. Nagy, and of course, also want to thank the Associate Vice President, Strategic Knowledge Department, IFAD, Mrs. Jo Puri, for her support of this partnership. And last but not the least, my colleague, Mr. Liwadin, for really doing the heavy lifting on this seminar, providing both the substantive and the logistical support for the meeting, as well as my colleagues in the front office, Michelle, Teresa, Mary, and Jorge. Thank you so much, and we look forward to seeing you in the next event. The meeting's adjourned. Bye-bye.
Thank you. Bye.
Thank you. Thank you.
Thank you. Thank you so much.
Thank you so much.